The West just lost, not in a war, not in a single vote, in something far more permanent. October 2024, Kazan, Russia. 36 nations gathered, representing 45% of the global population, controlling 37% of global GDP by purchasing power parity. And in 72 hours, they restructured the financial architecture that has governed international trade since 1944. This wasn't a conference. This was a coup, a monetary coup. And if you're holding dollars, if you're invested in Western markets, if you believe the system you grew up in will continue indefinitely, you need to understand something right now. History doesn't care about your beliefs. It operates on patterns, predictable, repeatable, undeniable patterns. And the pattern we're watching unfold has happened before, 3 times in the last 5 centuries. And every single time, the dominant power that ignored it collapsed. Not gradually, catastrophically. Let me show you exactly how this works, because once you see the pattern, you can't unsee it. And more importantly, you'll know exactly what comes next. Every global reserve currency system follows the same 4-stage death cycle. Stage 1 is the foundation. A dominant power emerges from a major conflict or crisis with overwhelming economic and military superiority. They establish a currency system where their money becomes the medium for international trade. Other nations accept this because the dominant power offers something valuable in return: stability, protection, access to markets. The system works because it's backed by real economic output and genuine military capability. Everyone benefits. Trust is high. The currency is as good as gold because the nation behind it is genuinely productive and powerful. Stage 2 is expansion and debasement. The dominant power discovers something intoxicating. They can print money and the world still accepts it. Why? Because their currency is the reserve. Everyone needs it for trade. So they start spending beyond their means. Military campaigns across multiple continents, welfare programs that promise everything to everyone, infrastructure projects that look impressive but don't generate returns. And here's the critical part. They finance all of this not through taxation or genuine economic growth, but through currency creation. They print, the world absorbs it, the party continues. For decades, this seems like genius. Free money, endless power, the ability to wage wars and buy votes without immediate consequences. But here's what's actually happening. The currency is being debased. Each new unit of currency represents a smaller fraction of real economic output. The dominant power is writing checks their economy can't cash. And slowly, quietly, the rest of the world starts to notice. Stage 3 is crisis and loss of control. The mathematics catches up. Inflation appears, not just domestically, but globally, because the reserve currency's debasement exports inflation to every nation holding it. Suddenly, countries holding massive reserves of this currency realize they're holding a melting ice cube. Their purchasing power is evaporating. They paid real goods, real labor, real resources to earn this currency, and now it's worth less every quarter. Resentment builds. Alternative arrangements start appearing. Bilateral trade agreements, regional currency unions, anything to reduce exposure to the dying currency. The dominant power responds with threats, sanctions, military pressure. They try to force nations to continue accepting their currency. But force reveals weakness, and weakness accelerates the exodus. What started as a trickle becomes a flood. Nations dump reserves, they reject the currency for trade. The dominant power, now desperate, prints even more to maintain their standard of living, which only accelerates the collapse they're trying to prevent. It's a doom loop, and it's unstoppable once it starts. Stage 4 is the inevitable outcome. The reserve currency loses its status. International trade reorganizes around new systems. The former dominant power faces a brutal adjustment. Their standard of living, inflated for decades by their ability to print money the world accepted, crashes to match their actual economic output. Domestic chaos follows. Political upheaval, social unrest, sometimes civil war. The nation doesn't disappear, but it never regains its former position. A new power rises, and the cycle begins again. Now, you might be thinking this is theoretical. Abstract economic theory divorced from reality. So let me show you the 3 times this exact pattern has already played out, and pay attention to how precisely it matches, stage for stage, because when you see it, you'll recognize exactly where we are right now. Spain, 16th century, stage 1 begins in 1492. Columbus reaches the Americas. Within 50 years, Spanish conquistadors have established the largest empire on earth. Silver flows from the mines of Potosi in quantities never before seen in human history. Spanish reals become the global reserve currency. Every merchant in Europe, Asia, and Africa wants silver. Spain mints it. The world accepts it. Spain dominates global trade, controls vast territories, and their currency is literally backed by mountains of silver. This is the foundation phase. Real wealth, real power, real trust. Stage 2. The silver keeps flowing, tons of it. shipped across the Atlantic monthly, and Spain starts spending like the flow will never stop. They fight wars across Europe. They build a massive bureaucratic state. They fund religious campaigns. They maintain the largest navy in the world. But here's the problem. They're not building industries. They're not investing in agriculture or manufacturing. They're importing everything: food, weapons, clothing, all purchased with silver. The currency is flowing out as fast as it flows in. Even worse, the massive influx of silver causes inflation across Europe. Prices quadruple between 1500 and 1600. Each coin buys less. But Spain keeps spending, convinced their silver mines are inexhaustible. They're debasing their position without even printing money. The flood of silver itself is devaluing it. Stage 3. By 1557, Spain defaults on its debts. First time. They default again in 1560, in 1575, in 1596, in 1607, in 1627, and 1647. 8 sovereign defaults in 90 years. Why? Because the silver isn't enough. The spending has outpaced even the legendary mines of the New World. Other European nations start rejecting Spanish currency. They demand payment in goods or alternative metals. The Dutch begin establishing their own trade networks that bypass Spanish currency entirely. Spain responds with force. They fight the Dutch for 80 years. They fight the English. They fight the French. Each war drains more silver, requires more borrowing, leads to another default. The doom loop is spinning. Stage 4. By 1650, Spain is finished as a global power. The silver still flows, but nobody cares. The currency is worthless. The empire is fragmenting. The Spanish economy, which never built domestic industries because they could just buy everything with silver, collapses. Famines, revolts. A population decline of nearly 25% over 50 years. Spain doesn't disappear, but they're never again a dominant power. The reserve currency shifts to Amsterdam, to the Dutch guilder, and the cycle begins again. Britain, 19th century. Stage 1 begins after the Napoleonic Wars. Britain emerges as the undisputed superpower. They control the seas. They've industrialized first. The British pound, backed by gold, becomes the global reserve currency. The sun never sets on the British Empire. And the system works beautifully. Sterling is as good as gold because Britain says it is, and Britain has the navy to back it up. International trade flows through London. The pound is stable, trusted, universal. Stage 2. Britain starts expanding beyond their means. They're fighting colonial wars across Africa and Asia. They're administering territories on every continent. The costs are astronomical. The Boer War alone costs Britain over £200 million. World War I costs them another $9 billion. Where does this money come from? Borrowing, currency creation. And here's the critical move. In 1914, Britain suspends gold convertibility. The pound is no longer backed by gold, it's backed by trust, by Britain's promise. And for a while, the world accepts this. But the currency is being debased. Britain is spending more than they produce. The gap is widening. Stage 3. After World War II, Britain is exhausted. They've won, but at catastrophic cost. They're deeply in debt, their industries are damaged, their empire is restless, and the United States is offering a new system. Bretton Woods. The dollar, convertible to gold, becomes the new reserve currency. Nations start dumping sterling. Britain tries to maintain the pound's value through currency controls and appeals to Commonwealth loyalty. It doesn't work. In 1947, Britain is forced to accept a massive loan from America. The terms are brutal. The pound is devalued, then devalued again in 1949, and again in 1967. Each devaluation is presented as a temporary adjustment. Each one is actually a step down from reserve status. The exodus accelerates. Stage 4. By 1976, Britain goes to the International Monetary Fund for a bailout. A bailout. The nation that once ruled a quarter of the earth is begging for loans. The pound has lost reserve status. The empire has dissolved. Britain faces inflation above 25%. Strikes paralyze the country. The standard of living, inflated for decades by their ability to import goods with printed pounds, crashes. The 1970s in Britain are characterized by decay, dysfunction, and national humiliation. They survive, but they never recover their position. The reserve currency has shifted to America, to the dollar, and the cycle begins again. The United States, 20th century to present. Stage 1 is Bretton Woods, 1944. World War II is ending. Europe is destroyed. Asia is in chaos. America emerges with over 50% of global industrial production. They have the gold. They have the military. They offer the world a deal. The dollar, convertible to gold at $35 per ounce, becomes the global reserve currency. Everyone accepts it because the dollar is genuinely backed by gold and by America's overwhelming economic power. This is real. This is solid. The system works. Stage 2 begins almost immediately. Korea, Vietnam, the space race, the Great Society, Medicare, Medicaid, Social Security expansion. America is spending staggering amounts. By the 1960s, they're running deficits every single year, and they're paying for it by printing dollars. France notices first. Charles de Gaulle starts demanding gold for dollars. He sees what's happening. America is printing more dollars than they have gold to back. The debasement is underway. By 1971, the mathematics is undeniable. Foreign nations hold more dollars than America has gold in Fort Knox. The jig is up. Nixon closes the gold window, August 15th, 1971. The dollar is no longer convertible to gold. It's now backed by nothing except America's promise. And for 50 years, the world has continued accepting this arrangement. Why? Because America still has the largest economy, the strongest military, and they've established something even more powerful than gold backing, the petrodollar system. Here's how it works. In the 1970s, America cuts deals with Saudi Arabia and other oil producers, sell oil only in dollars. In exchange, America provides military protection. This is genius. Every nation on earth needs oil. To buy oil, they need dollars. To get dollars, they need to sell goods to America or hold dollar reserves. Suddenly, the dollar has inherent demand completely divorced from America's economic output. It's backed by global energy needs. This extends stage 2 for decades beyond what should have been possible. America runs larger and larger deficits. The trade deficit explodes. America imports far more than they export. They pay for it with printed dollars, and the world accepts it because they need dollars for oil. But the spending accelerates. The wars in Iraq and Afghanistan cost over $2 trillion. The 2008 financial crisis triggers quantitative easing. The Federal Reserve creates trillions of dollars out of thin air to buy bonds and stabilize banks. COVID-19 arrives, another $5 trillion in spending, then student loan forgiveness, infrastructure bills. The numbers are so large they lose meaning. $28 trillion in national debt, another $200 trillion in unfunded liabilities, Social Security, Medicare, pensions. None of it has funding. America is writing checks that cannot possibly be cashed by future economic output. The debasement is complete, and the rest of the world is watching. Stage 3 is happening right now. The crisis is here. Look at the signs. Russia invades Ukraine in 2022. America responds with sanctions. They freeze Russian dollar reserves, $300 billion. Just frozen, confiscated. This sends a message to every nation holding dollar reserves. Your dollars are only yours if America says so. If Washington disagrees with your policies, your reserves can vanish. China sees this, India sees this, Saudi Arabia sees this, and they start making moves. China and Russia begin trading in yuan and rubles, bypassing dollars entirely. India buys Russian oil in rupees. Saudi Arabia starts accepting yuan for oil sales. The petrodollar system, the mechanism that extended dollar dominance for 50 years, is cracking. Nations are diversifying out of dollars not because they hate America, but because holding dollars is now a political risk and an economic loss. Inflation is running hot globally. Every nation holding dollar reserves is watching their purchasing power erode. They exchanged real goods for these dollars, and the dollars are worth less every quarter. Then comes October 2024. Kazan, Russia. The BRICS summit. Brazil, Russia, India, China, South Africa, plus 31 other nations. Together, they represent nearly half of humanity and over a third of global economic output. And they announce plans for an alternative financial system. Not just talk. Specific mechanisms? A BRICS payment system to bypass SWIFT. A potential BRICS currency for trade settlement. Bilateral agreements to trade in local currencies. Gold-backed trade instruments. The details are complex, but the message is simple. We're building rails around the dollar. We're creating options. We're reducing dependence. This is the exodus. This is the rejection. America responds with threats, sanctions, and increasingly desperate attempts to maintain dollar dominance through force, which only proves to the world that the dollar is no longer backed by economic strength, but by military coercion. And coercion is not a long-term strategy. Let me be specific about what was actually decided in Kazan, because the Western media barely covered it, and what they did cover was dismissive. First, BRICS expanded again. Egypt, Ethiopia, Iran, and the United Arab Emirates became full members. Saudi Arabia is in discussions. Turkey is interested. Malaysia, Indonesia, dozens of nations want in. This isn't a fringe movement. These are major economies voluntarily choosing to align with an alternative system. Second, they established the framework for a BRICS cross-border payment system. Think of it as a SWIFT alternative. Right now, almost all international banking transactions flow through SWIFT, which is dominated by Western banks and can be weaponized for sanctions. Russia learned this. Now, BRICS is building a system where member nations can settle transactions directly in local currencies without touching dollars or Western banking infrastructure. Third, they discussed expanding the new development bank. This is BRICS' answer to the IMF and World Bank. Instead of going to Washington for loans that come with political conditions, developing nations can now get financing from Shanghai with fewer strings attached. The bank is still small, but it's growing, and it provides options. Fourth, and this is the big one, they explored mechanisms for gold-backed trade settlement. Not a single BRICS currency replacing the dollar. That's a media myth. But rather, a system where member nations can settle trade imbalances using gold, bypassing dollar reserves entirely. China and Russia are already doing this bilaterally. The Kazan summit discussed scaling this across all BRICS members. Now let me tell you what this actually means. It means the global south, the majority of humanity, is building financial infrastructure that doesn't require dollars. They're not attacking the dollar. They're simply creating alternatives. And alternatives are deadly to a reserve currency because a reserve currency's power is based on indispensability. The moment nations have viable options, they take them, especially when the existing option is losing value through inflation and can be frozen at any moment for political reasons. Let's check this against the pattern. Stage 1. America emerged from World War II with overwhelming power and established dollar dominance backed by real economic strength and gold. Check. Stage 2. America spent beyond its means for decades, financed by printing dollars the world absorbed because of reserve currency status and the petrodollar system. Check. Stage 3. The mathematics caught up, inflation exported globally, nations began creating alternatives, and America responded with sanctions and threats that revealed weakness and accelerated the exodus. Check. We are here right now. Stage 4 is next, and if the pattern holds, stage 4 is collapse. Not gradual decline, collapse. Let me paint the picture of what stage 4 looks like based on the previous examples and current trajectory. First, the dollar loses reserve status, not officially announced. There's no ceremony. It happens through accumulation of bilateral decisions. China and Brazil trade in yuan and reais. India and Russia trade in rupees. ASEAN nations settle regional trade in a basket of local currencies. Middle Eastern oil is sold in yuan, euros, and gold. One day, analysts will look at the data and realize the dollar is no longer the dominant medium for international trade. It's just one option among many, and it's declining. Second, America faces a sudden adjustment. For decades, America has imported far more than it exports, paying for the difference with printed dollars. This only works while the world accepts and holds those dollars. When they don't, when they start rejecting dollars or immediately converting them to other assets, America has to actually balance trade, which means either exporting more or importing less. Given America's current industrial base, exporting more is difficult, so it's importing less, much less. The standard of living, inflated for decades by cheap imports paid for with printed money, craters. Suddenly, Americans can't afford imported electronics, cars, clothing, food. Prices spike. Real wages fall. This isn't gradual, it's a cliff. Third, the government can't respond the way they always have. Previously, any crisis was met with more spending, more stimulus, more printed money. But now, printing money doesn't work because the world isn't absorbing it. Printing just causes immediate domestic inflation. The government is trapped. They can't print their way out. They can't borrow easily because who wants to hold depreciating dollars? So they're forced to cut spending or raise taxes dramatically. Both are political nightmares. Neither happens smoothly. Fourth, domestic chaos. When living standards fall sharply and quickly, populations react. Protests, strikes, riots, political extremism rises. Both left and right. Each blames the other. Institutions lose legitimacy. Crime rises. Infrastructure decays because there's no money to maintain it. It's not apocalypse. It's Buenos Aires in 2001. It's Britain in the 1970s. It's manageable but deeply unpleasant. And it lasts years, potentially decades. Fifth, America doesn't disappear. The nation survives. The military is still powerful. The nuclear arsenal is still there. The geography is still favorable. But the position of dominance is gone, permanently. America becomes a major power among several, not the superpower. Standards of living adjust downward to match actual economic output, rather than the inflated levels made possible by reserve currency status. It's a poorer, more constrained America. Still significant, but no longer exceptional. Now here's what people always say when they hear this. This time is different. America has the tech sector. America has the world's most powerful military. America has rule of law and property rights. The dollar is backed by the full faith and credit of the United States government. Everyone else is worse, so the dollar remains the best option. These sound reasonable. They're also exactly what people said about the Spanish real, the British pound, and every other failed reserve currency in history. Let me address each one. This time is different. No, it's not. The pattern is the pattern. Technology doesn't change mathematics. Spain had the most advanced ships and metallurgy of their time. Britain had the Industrial Revolution. Technology provides advantages, but it doesn't exempt you from the consequences of currency debasement. If you print more money than your economy produces value, the currency loses purchasing power. This is not a theory, it's arithmetic. And it happens regardless of how advanced your tech sector is. American military power ensures dollar dominance. No, it doesn't. Britain had the world's most powerful military when the pound lost reserve status. Military power can compel specific behaviors in specific contexts, but it cannot force billions of people to accept a currency they don't want for trade. You can invade a nation. You cannot invade an idea. And the idea that the dollar is a bad store of value is spreading. Moreover, military power is expensive. It's one of the main reasons reserve currencies collapse. The spending required to maintain global military dominance accelerates the currency debasement that leads to loss of reserve status. The military is both a source of power and the mechanism of collapse. Everyone else is worse, so the dollar wins by default. This assumes reserve currency status is a binary. It's not. The world doesn't need to choose a single replacement for the dollar. They can choose diversification. Hold a basket of currencies. Trade bilaterally in local currencies. Use gold for settlement. Use commodities. The dollar doesn't lose to a single competitor. It loses to fragmentation. And that's exactly what's happening. BRICS isn't proposing a BRICS dollar. They're proposing a multipolar currency system where no single currency dominates. That's the threat. Not a replacement, but the end of centralized reserve status itself. The United States government's full faith and credit backs the dollar. Yes. And what is that faith based on? America's ability and willingness to repay debts. But America has $34 trillion in debt and rising. Debt to GDP is over 130%. Worse, America has over $200 trillion in unfunded liabilities, Social Security, Medicare, pensions. These are promises the government cannot mathematically keep without either defaulting, inflating the currency to nothing, or taxing at rates that would destroy the economy. The full faith and credit argument works only if the faith is justified. Increasingly, it's not. Here's what I want you to understand. The people making these arguments, the ones insisting the dollar is safe and American dominance is permanent, are not lying. They genuinely believe it. They have to. Their entire worldview, their investments, their careers, their psychological security depends on it being true. Accepting the pattern means accepting that their dollars are melting ice cubes, that their government bonds are long-term losses, that the retirement plans they have been sold are fantasies. It's cognitively easier to dismiss the pattern than to confront it. But denial doesn't change outcomes. It just means you're unprepared when they arrive. Let me show you the current data so you can see exactly where we are in the cycle. In 2000, over 70% of global foreign exchange reserves were held in dollars. Today, it's below 59% and falling. That's an 11% drop. Doesn't sound like much until you realize that represents trillions of dollars flowing out of dollar reserves into alternatives. China has been a net seller of U.S. treasuries for years. They're not buying more American debt. They're reducing exposure. Russia dumped nearly all their treasury holdings after 2014. They hold gold instead, lots of it. Russia's central bank gold reserves have increased by over 2,000 tons since 2008. China's official gold reserves have increased by over 1,000 tons, and many analysts believe their actual holdings are far higher because they buy through proxies to avoid alerting markets. The petrodollar is cracking. Saudi Arabia, America's key partner in the petrodollar system, is diversifying. They're accepting yuan for oil sales to China. They're in discussions to join BRICS. They're building closer ties with Russia and Iran, despite American objections. The Saudis are not abandoning America, but they're hedging. And hedging is the beginning of exit. The UAE is doing the same, so is Kuwait. When the nations that gave the dollar its energy backing start accepting alternatives, the game is over. Sanctions are accelerating the process. Every time America freezes assets or kicks a nation out of SWIFT, they provide a case study to the rest of the world on why dollar dependence is dangerous. Russia was cut off from SWIFT. They survived. They built alternatives. They trade with China, India, and others using alternative payment systems and currencies. This was supposed to cripple Russia. Instead, it proved that alternatives work. Now every nation is building backup plans, not because they want to oppose America, but because relying entirely on a system that can be weaponized against you is strategically stupid. Let me give you the timeline as best as current data suggests. We're in late stage 3 right now. The alternatives are being built. The exodus is beginning. Stage 4, the actual collapse of dollar reserve status, could happen anytime in the next 5 to 15 years, probably closer to 5. Why? Because the process is nonlinear. It's slow for years, then very fast. Think about how a dam breaks. Water seeps through cracks for years. The structure weakens gradually. Then one day, the dam fails catastrophically in minutes. Reserve currency collapse works the same way. It looks stable until suddenly it isn't. And once the collapse starts, it's exponential. Nations see others exiting and accelerate their own exit to avoid being left holding worthless reserves. It's a stampede. Here are the trigger points to watch. First, oil sales outside of dollars reaching critical mass. If 50% or more of global oil trade is denominated in non-dollar currencies, the petrodollar is effectively dead. We're not there yet, but we're heading there. Second, the BRICS payment system going fully operational. Once that happens, a significant portion of global trade can bypass dollars entirely. That's a structural shift. Third, a U.S. debt crisis. If there's a point where treasury auctions fail because foreign buyers don't show up, or if yields spike because buyers demand much higher rates to compensate for currency debasement risk, that's a signal that faith is breaking. Fourth, domestic inflation in America, rising above 7% and staying there. That level of inflation exports to the world and makes holding dollars obviously destructive. Nations will dump reserves quickly. Any one of these could be the trigger. All of them are increasingly likely in the next several years. Now let me tell you what you should do with this information, because understanding the pattern without acting on it is useless. First, reduce dollar exposure. Not eliminate, reduce. Hold multiple currencies, especially currencies of nations with low debt, trade surpluses, and commodity backing. The Singapore dollar, the Norwegian krone, the Swiss franc. Diversification protects against single currency collapse. Second, hold hard assets. Gold, silver, productive real estate, commodities. Things with intrinsic value that don't depend on any government's promise. When currencies collapse, hard assets hold value. This is proven across every historical example. Third, understand that stock markets denominated in dollars might go up in nominal terms while losing value in real terms. A stock portfolio could double while your purchasing power halves if the dollar collapses. Focus on real returns, not nominal returns. Fourth, consider geographic diversification. Having assets, income streams, or residency options in multiple countries reduces concentration risk. If America enters stage 4 chaos, having options elsewhere is valuable. Fifth, build skills and relationships that have value independent of financial systems. The ability to produce goods, provide services, or solve problems is valuable regardless of what happens to currencies. In every collapse, people with tangible skills survive better than people dependent entirely on financial assets. Sixth, stay informed but avoid panic. The collapse is coming, but it's a process, not an event. You have time to prepare. Rushing into decisions out of fear usually leads to bad choices. Understand the pattern, position accordingly, and adjust as new information emerges. Seventh, be skeptical of government and financial industry reassurances. They have incentive to maintain confidence in the system even as it fails. Their job is to prevent panic, not to tell you the truth. Trust the data, trust the pattern, trust mathematics. Let me address one more objection. Some people hearing this will say I'm catastrophizing, that I'm predicting doom when the reality will be much more mundane. Maybe America declines slowly, and the dollar loses reserve status gradually over decades without crisis. I would love for that to be true. But history suggests otherwise. The Spanish real collapsed. The British pound collapsed. Both times, the process was far more painful than anyone expected. And both times, people in the dominant nation convinced themselves it would be fine right up until it wasn't. The normalcy bias is strong. Humans are wired to expect tomorrow to look like today. We're bad at anticipating structural change, but the pattern doesn't care about our biases. Here's the bottom line. BRICS 2024 in Kazan wasn't just another summit. It was the moment the Global South formally, publicly, structurally rejected dollar hegemony and began building alternatives. Not in theory, not in rhetoric, in practice. With institutions, payment systems, and trade agreements. This is the exodus. This is stage 3 in full swing. And stage 4 is next. You don't have to believe me. Watch the data, watch central bank gold purchases, watch the percentage of global trade settled in dollars. Watch oil sales and alternative currencies, watch the BRICS payment system rollout, watch US Treasury auction results. The signs are there for anyone willing to look. The West didn't lose because they're weak. They lost because they followed the exact same pattern every previous reserve currency followed. They debased their currency, they spent beyond their means, they weaponized their currency and pushed the rest of the world to find alternatives. And the rest of the world did. This isn't about East versus West. It's not about communism versus capitalism. It's not about democracy versus authoritarianism. It's about mathematics. And mathematics is undefeated. The pattern is clear. The outcome is inevitable. The only question is whether you'll see it coming and position accordingly, or whether you'll be caught unprepared when the adjustment happens. History doesn't repeat, but it rhymes. And right now it is rhyming so precisely with 1650 Spain and 1976 Britain that anyone paying attention should be deeply concerned. The day the West lost the Global South already happened. October 2024. Kazan. Now comes the consequences. And consequences, unlike rhetoric, are unavoidable.